All right, guys. Highlight of the day, Tuesday, August 13th. What are we going to talk about? What was obvious after the Open, the relationship between the drivers and the headlines that come out to change things around. We open up 60 points below where we ended up rallying, and we knew why. And how do you know why? Because number one, and this is what's important, is number one, what the hell is driving the market. When I say driving the market, meaning news, another market, geopolitical event, an election, interest rates, central banks. And then number two, what does it mean? How could you anticipate what could come down the wire to make us bullish if you trade stocks or bearish if you trade stocks? Currencies, bonds, it doesn't matter. It's influence. You're only as good as the fundamentals at some point. And if you have a clear driver, it's important to watch how that driver is reacting. So today, we open up. I bring over a news source, and there's plenty of news sources that people could use. This one I like. I've used it for a long time. They've been around for over a decade, Trade the News. All right? They aren't necessarily, what's the word? Super cheap, but they're not that expensive. What's important about being in tune with what's going on is to miss less. Anytime you have to ask the question, why did that happen? What just happened? You're missing something. So how do you miss less? How do you put yourself in a situation to not only be aware of what's going on in a real-time fashion, but be able to actually take opportunity out of it? Reverse if you're short earlier this morning. Get long, get your day back if you're down. First trade I was down, got it back, and then some with this story, because you have to diligently react to what's going on. So the highlight today, these yellow highlights are more important news, but the highlight today, the times are up here on the left, was right after the Open. First thing was the negotiator leading China spoke to the U.S. Trade Rep Lighthizer and Treasury Secretary by phone. We'll speak again in 2 weeks. We know that the driver has been U.S.-China in the trade war. We know it was doubtful that they were going to meet again. This confirmed it. That's bullish. We start rallying, and it was catchable. How do I know it's catchable? Because in the room, what did we say? Hey, this is bullish. We were trading, I think, 79 even, 28.79 even. Then it gets backed up a few minutes later. Next steps on proposed 10% tariff on China imports. They'll postpone tariffs on some items to December 15th. It's showing good faith. That was bullish. Another leg higher. These two things not only are bullish, but they're also underneath what's driving the market. They're the bullet points underneath the main topic of what's driving the market, this U.S.-China trade. This is a huge deal. In my 20 years, trade negotiations, trade wars never were fundamentally part of trading the market. So there's a lot of uncertainty of how they're going to affect not just the U.S. and China economies, but globally. The uncertainty is really, really high because, again, we can't point to another trade war and say, well, this is what happened, and this is how we're going to navigate through it. These are the two biggest economies trying to reach some sort of deal. I don't even think the world investors care about what kind of deals reach. Who wins on this deal? The terms of this deal. They just want to see averting a giant trade war and the negative impact that it could have. So we talk about market correlations. It isn't just between one market and another market, which is important. It's between the market you're trading and a particular news event or driver. Then when we scroll up, this also gets squawked. So you're able to hear the news and then see it posted. Now, 10 minutes after 10, initially this was a bullish report in my opinion and in the market's opinion. Before it said clashes have been reported in the Hong Kong airport, it was talking about operations reopening in Hong Kong. That was a driver Sunday night going into Monday morning here in the U.S. or for U.S. markets and global markets because they closed the airport. And then yesterday afternoon, China was lining up police or soldiers along a city bordering Hong Kong and China That was really bearish for stocks. You needed to know that. You needed to trade that if you could. So everybody works so hard and buys books and reads countless pages of setups and strategies and profiling and trading psychology. And then they don't understand this. It's ridiculous. It's ridiculous. This is literally a tape measure for a carpenter. You're going to learn all about wood and all about nails and screws, and then someone gives you a tape measure and you're like, well, what do I do with this? No matter how much you know about wood, and you're going to be a carpenter, you better be able to use a tape measure. That's the best analogy I could give you with how important it is to know the driver, to know how it could influence and change direction of the market you're trading, and to know how and quick it could totally reprice the session like it did today, a rally of 60 points in the ES. Now, here's an ancillary market that's important. And this is kind of a long highlight today because it was a big day. When this market goes down, this Japanese yen, generally it's going to be strength to stock indexes. So an opposite chart pattern you'll see in this market than stock markets. So at that 835 headline that the U.S. and China were going to meet in a couple weeks, and then subsequent to that they were going to meet or delay tariffs rather, you got all that strength we just showed you in the ES. Look at all this weakness in the yen to help keep you in a long position, to help get you in a long position. Hell, if you reach over and you could see maybe I could sell the yen because I missed the ES rally, and you could see all this weakness, this first leg, this second leg lower in the yen. You could see maybe, I mean, it's easier to say this now, but maybe you would see a big jump and a reversal. So I don't want to be long the ES because I see strength in the yen. Keeps you comfortable. And it's not hindsight. It's all real time. And the key to market correlations is the faster, quicker something happens, the more important it might be, especially if that market's influencing yours. If anybody learns this business and only watches the market that they trade, they would never trade my money. They'd be laughed out of any prop firm in the world. You got to focus on more than what price is doing in only the market you're trading. And most guys start this business analyzing the hell out of one thing, and they're oblivious to the things that surround it. I'd love to do a commercial, kind of a skit, going to negotiate a car with a car salesman and telling him that his price is too high because he's above a 50% retracement in Fibonacci, or at a value area high on a profile. So good luck. Just remember, news matters. It is catchable at times. Even if it's not, it's important to know how it could affect the market that you trade, how it affects other markets that influence yours, and if the damn market's doing what it's supposed to or not. Sometimes you get bullish news, you know it's bullish and we can't rally, that's bearish. That's even important. Sometimes you get a nice pop on news that really isn't that bullish and it just made that market expensive. That's important. Good luck in volatile trade. Price of poker goes up. You're not at the Imperial Palace in Las Vegas on a Wednesday night. You're at the Wynn on a Saturday night.